Hey guys, this is Rudy for Investor Investor. Markets are crashing. It's Monday, September 21st. Looks like we're entering another little mini correction here today. Of course, we'll have to see what happens tomorrow. But in the meantime, what I thought is I'll take a look at the energy today, take a look at the news updates, see if I can find if there's any method in the madness or is it just a general crash, and figure out what's going on. I noticed that WTI is kind of down, obviously almost 5%, but it's holding at around $39.25. So that seems to be sort of okay for today, sort of thereabouts, $40. Brent just over $40. That looks okay too. So let's see what's going on. Anyway, to brighten up your day, I thought I'll record this one with a pretty big sunflower behind me. So if nothing else brings a smile to your face, either my profile picture will or the sunflower will. So let's go. So let's first look at my energy stocks today. So this is my personal portfolio. It's not the quantities I hold, but it's the actual equities that I have in my energy portfolio. From the top down, Enbridge, OXY, the OXY warrants. PBA is Pembina Pipelines, a Canadian pipeline company, diversified oil and energy company. And TOT, which is the French company. So the last time I looked earlier today, these stocks were all negative, as is pretty much everything in the market today. So Enbridge down 2.5%, Oxy down 5%, just kind of clinging for dear life to $11 a share. The warrants, doesn't matter what they're trading at, I'm going to keep them anyway for longer term. Pembina down 4%, Total down 4%. We're just taking a pounding, so today I kind of feel like this little dude over here, which is not me, I just scooped him off the internet. How about the sector performance for today? So we want to look at the sector versus the S&P 500. The S&P earlier on when I put the slide together was negative just over 2%. And of course, everybody's been telling us it's the tech stocks that have been leading the charge in terms of the decline. All the stay-at-home stocks during the coronavirus, because let's not ignore the media's contribution to where we are at today. Coronavirus, stock market crashing, oil wars, Saudi Arabia, Libya starts pumping oil again. All the bad news you could possibly think of, they just concocted all together in one big story for us today. So you can look at this little triangle that's formed here from real estate all the way down to materials, and you can see energy, one of the big losers today, kind of in line with the S&P 500. I'll see if I can find us a glimmer of good news, and we'll see if you can maintain your viewership with me until the end of this presentation, so we can learn what's going on. So let's look at the news. Oil prices slide on September 21st as Libya restarts production. Libya's National Oil Corporation will restart production. Our main concern, and here I'm quoting, is to start production and exports taking into account the safety of workers and operations, says NOC, which is the National Oil Corporation of Libya. Their chairman, Mustafa Sanala, said in a statement. Then he added, the force majeure will be lifted from fields and ports that are free of the presence of paramilitary troops and mercenaries. So there's your first sort of little optimism of the day. If you're not in Libya, then at least you can be pleased with the fact that even though your oil stocks and other equities may be crashing, at least you're not in the presence of paramilitary groups and mercenaries today. Well, I hope not, wherever it is that you may find yourself. Here's an interesting little tidbit I picked up on the news today. UK energy firms could switch off electric vehicle chargers as demand peaks. New rules proposed in the UK would see electricity distributors switching off electric vehicle chargers at home. Well, that would be a bit of a bummer. I mean, if you drive an electric car and you can't charge it, you're probably not going to be able to go anywhere. Unless you have like a ride-on lawnmower or something like that to get around with, you're probably going to be a little bit stuck. But the good news is the distributors will only use this as a last resort measure if the market mechanisms fail. But the new proposal gives power distributors in the UK the right to decide when the grid overload is in an emergency situation and then you can no longer charge your car. So ironically here, they didn't turn off all the power, so you're still allowed to cook and do your laundry, but you're not allowed to charge your electric vehicle if this proposal goes through. We'll have to see what happens with that one. And here's some optimism for you. Goldman Sachs is bullish that Brent will hit $49 by year end. Goldman Sachs is bullish on oil and predict that Brent crude prices will recover to $49 a barrel by the end of this year. So when Goldman Sachs goes bullish, I usually automatically become a bit bearish because I'm not sure which side of the trade they're on, because usually they straddle the fence and they are pretty much on both sides of the trade. So with Goldman, I'm never sure. If Goldman Sachs is bullish on crude, I should probably be a little bit cautious. But anyway, I'll take it as good news for now. According to a Reuters report, Goldman analysts said that the recent floating storage of oil is more transient inventory allocation dynamics. If you know what that means, then you probably win a prize, because that's Goldman Sachs speak for let's just tell you it's all going to be good and Brent's going to hit $49, and we'll throw in some words that you don't understand just to confuse you completely. Well, here's the easy part. We'll estimate that the oil market remains in deficit with speculative positioning now at too low levels. Well, I want to understand. That's actually pretty good news. And Goldman says they have a crude target of $65 by the third quarter of 2021, which is good news for investors who are long in equities like Occidental Petroleum, because if crude hits $65 a barrel, then Occidental is pretty much printing money. Active oil rigs fall again as WTI finishes strong. So Baker Hughes reported on Friday that the number of oil rigs, gasp, fell by 1. And the total number of active oil and gas rigs actually increased for the week. This is last week, by the way, by 1, because oil rigs fell by 1, but gas rigs increased by 2. So that's kind of like nothing. And then it says, but total oil and gas rigs in the United States were now down 613 compared to this time last year. Well, that's not nothing, that's something. So that's a significant downturn in the number of active rigs that are currently out there. The Energy Institute's estimate for oil production rose for the week of September 11th. That's good news as well. Oil production wouldn't rise unless there's an increased demand, and oil production is currently trending at around 10.9 million barrels per week. So it's fairly decent. Sorry, 10.9 million barrels per day. So we can see that there's a little bit of an increased production going on in the Permian Basin. The world's #1 oil trader sees crude inventories shrinking. Well, that's kind of a good news story as well. Vital Group, the world's largest independent oil trader, expects global oil inventories to continue drawing down for the rest of this year. However, Vital's rivals and many of the analysts see a glowing gut on the market. So we have a bit of a supply and demand argument going on sort of below the line here in terms of he said, she said. The world's stockpiles of oil have diminished by around 300 million barrels since peaking at 1.2 billion barrels early this summer, and is expected to decline by another 250 to 300 million barrels between September and December, which is the period we are in now. So if the stockpiles are declining, that means there's going to be less supplies, and we can anticipate at least that there's some uptick in demand, which means that we should be able to achieve some higher oil prices. So maybe Goldman Sachs was right. I'm not sure yet. We'll hold judgment on that one until we see where we go. However, refineries that have bought a lot of cheap oil in the past few months are expected to play a key role in drawing down global inventory, said Russell Hardy, who is the CEO of the Vital Group. And then Gulf oil drillers evacuate as another storm approaches. Gulf of Mexico bracing for yet another storm as tropical storm Beta. So I'm not sure if Beta is scary or not, but tropical storm Beta is moving towards the west and northwest of the Gulf. And Saturday, Royal Dutch Shell said it had evacuated all its personnel from the Perdido platform in the Western Gulf and shut down production as a precautionary measure. The National Hurricane Center warned in an advisory early on Monday that it had issued a storm surge warning with some flooding and rising water. So this is bad news. Bad news could sometimes be good news for oil drillers. If there's a shutdown, it automatically impacts demand because the demand might be static or rising somewhat and the supply is dwindling because of the shutdown. So we'll have to see if this has any effect at all. The other good news is it's just a storm surge warning and a tropical storm as opposed to hurricane, and those two things are obviously significantly different. We'll wrap it up with this. In closing, in the history of America, we have never had an energy plan. We don't even realize the resources we have available to us. That was a quote from T. Boone Pickens from a few years ago. I think today it's a little bit different because the US has actually moved into a position of strength on energy, which is oil and gas, natural gas. So T. Boone Pickens' quote is maybe slightly out of date. However, what is not out of date are alternative energy drinks where you can now have your choice between wind, solar, geothermal, and biomass. So on that note, just with a little tongue-in-cheek joke, this is Rudy for Bester Investor signing off. That's your energy news for Monday, September the 21st. I'll see you guys again soon, and stay safe, keep well. If you liked the video, please subscribe, and I'll be back.